Hello and welcome. Hopefully this is live. This is my first time trying this out. My name is Dustin. This is Dustin's Dollars. Hopefully you can see my screen there. I'm going to be talking today about a Knightscope. I am super excited. Knightscope is a company that I invested in a couple years ago, and we are finally going to get to see it trade on an exchange. So it's now going to be a public company as of tomorrow. And so I'm super excited about it. I don't know anybody else who's invested in the company, so I wanted to kind of do a stream here and talk about it, see if anybody joins. Whatever. I'm also testing this out, never done before. Before I get started, I will say none of this of what I talk about will be financial advice. I'm not a financial advisor. I'm don't listen to me about money advice. You probably do better doing the opposite of me. But just whatever. So I'm gonna get right into it. If you don't know what Knightscope is, they're a company that sells these autonomous security robots. So basically, they're robotic security guards. And I got the website up right here. You can see a couple models they have here. I click through. They have the one that's I guess the most common one, the most popular one that they have sold is this little guy right here. It's called the K5 model, and so they actually they sell these, except they don't sell the robots. They actually lease them, right? So people who want a security guard, they could use these robots inside these things. They will patrol, and they've got a whole setup here where they've got cameras and sensors, and the robots can actually do quite a lot. You can skim through all the capabilities are listed here on their website, and it's a pretty cool concept. The major thought process behind this is, you have a robotic security guard instead of a human security guard. And, the pros of having a robot are they are there 24/7. They don't have to work in shifts. You have to worry about turnover. The robot's always there, always showing up to work. And, the robot's never going to stop looking for things. And it has, with some of the AI that they have built in, they can identify things. They can read license plates. They can do facial recognition if there are people around. And yeah, you can see right there, it's actually listing some of the good stuff they can do. It's moving too fast for me to really go through. But this is the concept here is it's a cheaper a cheaper security guard that can do some of the monotonous work, and that's basically the concept here. They've got other models, as I mentioned. The K5 is meant to be sort of an outdoor model. The K3 is a very similar concept, but I guess I don't know if it's not weatherproof or whatever. I'm not 100% sure what the difference is, but it's meant for indoors, but a very similar concept. There's also the K1, which is just a stationary robot. It does at least stand up and have, I guess they like to call it an eye level view. But more or less, it's a camera, stationary camera, except it is integrated, I think, into the Knightscope platform, and that's one of the cool things that they have. If you actually look here, I was impressed when I saw at least some of the screenshots of the sort of the web UI that all of the robots feed into as a client. This is what you have that you can bring up and access anytime. And so I can imagine this is probably pretty useful if you have an existing, security team at your company, and they would pull up the robot will be deployed out patrolling, and you can have your security guard still just looking at this called the Knightscope Security Operations Center. You can see it right there, and it's got a lot of, this will record all the history of everything. So if they ever have to look back and see who was where on the property at a particular time, or if a crime is committed and they have to prosecute, the robots have all of that. I guess I should probably be looking this way since my microphone's over here. Hope you can hear me. My first time, so if I have some technical difficulties, this is my chance to try it out. Yeah, but they're finally, so this has been a private company, meaning you couldn't just go buy it in your investment account for a couple years, but they've been doing this sort of crowdfunding where they've been taking money where you can buy shares in the company during certain times that they've been raising funds. So that's sort of my interest in it, is because I did invest in the company a couple years ago, and I think they have, I think they in the long term have a lot of potential. They could be it's a very interesting company, and I think they, like I say, they have a lot of potential. And I'm gonna, walk through a couple of the more interesting things here that I've sort of picked out about the company. Um, One of the cool things, so they've, if you're not familiar with the company, and I talk about the long term potential, they do have their investor presentation here that you can find online and get. I should say you can go to knightscope.com/investors and you can bring up a lot of this information. But on this presentation, they give you, obviously a very very rosy picture of what the opportunity is for these robots. But I think it illustrates a really important point for the company that feeds into my thesis for why they have a lot of long-term potential, and that is sort of the total addressable market. I don't know if they have a slide in this presentation about what they believe is their total addressable market here. Maybe somewhere. No. Yeah, I think this is basically intended to be it. Yeah, I guess I was already there. So this would be their potential long-term opportunity, and this is already, assuming that that 20% of all of these companies or potential clients would decide that could use their service, 20% of them would, right? That's obviously a humongous assumption for the very very long term. um, but it does give you an idea of just how big the market is, right? They are not limited here as a potential $41 billion market opportunity in the long term is obviously humongous for a company that right now is valued at like $500 million, right? If they got to those numbers, that'd be absolutely insane. Because I mean, right now, these are numbers of long term 360,000 robots, and even near term, which if you read the small text here, near term is a 10-year business planning period. So I don't expect that to happen anytime soon. And being realistic, 36,000 robots in 10 years would be ridiculous growth. I mean, I'll be thrilled if that happens. I'm not necessarily expecting it, but you know, even at that, it's pretty obvious that they're not going to be limited by the market anytime soon, right? Uh, they have a lot that if they execute very well, this company can grow very quickly because the opportunity is there. And that's one of the most compelling things I think about this company is the total addressable market. But it makes sense that a lot of these companies over time, if this becomes a little more mainstream, we're going to hit a sort of an inflection point where these are viewed as reasonable augmentations to some of these companies that already have, one or two security guards to use one of these robots, especially when you compare, right? The other main point of their thesis is that, or of their, I should say, their value offering to clients is that their robots are cheaper per hour than a human guard, right? And here's just the rough comparison. Obviously, is going to go in favor of the robot because they're trying to sell it to you, but it's just strictly true that you have a person guarding your property and it's cost you, $17.50 they say per hour, whereas the robots are $3 to $9 per hour. There's obviously, like I said before, no turnover. They work 24/7. Now they do have to charge, but as far as I understand, they actually discussed this in one of the videos. Because that's an obvious question, like, oh, well, that's great, except for when the robot is, like charging. Unless they've figured out that perpetual motion, that infinite energy hack, they're gonna have to stop at some point. And the robots have to charge about 20 minutes every 3 hours, I think. And they still function during that time. They are just stationary. So that actually seems pretty reasonable from a client perspective to say that the robot's going to take a 20-minute stationary period where they're not even taking a break, but a stationary time chunk of time every 3 hours. Like, you think about a human security guard, they're going to have to take a couple breaks here and there. So I thought that was actually a pretty good, better than I expected. And obviously you can deploy the robot. The robot will do exactly what you want it to do. It will always patrol exactly uh, as you tell it to. You know, it's never gonna be checking its phone and not paying attention or whatever other things human security guards might do instead of their job. You know, you know, I'm sure most security guards are fine, but you know, with your robot, you don't ever have to question. You don't have to worry about it. You know, they're doing what you're doing, and you could even, if you had a couple robots because you have a large property, you could have a fleet of them that are divide things up exactly as you know would devise as a security strategy. I think that's a pretty interesting concept. But if you get back to this and you compare it to the current company, my point was that right now they have like 80, maybe 90 robots. We don't know exactly at the current moment. But the last time they answered the question, sometime I want to say maybe in December, they said about 80. And you know they've announced a couple new contracts since then, so it's possible they're up to 90 robots right now. Um, but when you think about the long term market could be over a quarter of a million of these things. Like again, the total addressable market is huge. They can keep growing for years and years and years, just doing what they're doing, just driving up sales and improving their robots to where the value proposition is good enough for most people who want to augment their security. Now, one other thing that I thought was a really interesting concept is they also have this Knightscope Plus service, and there's not a whole lot about this anywhere, but they do have it in their in the SEC filing in their offering circular. If you go looking here for the Knightscope Plus, they do mention it. Then yeah, it says right here. Might be a little small to see. I wonder if I can maybe make this bigger. You know, I'm doing this through OBS Studio as a side note, and I cannot see if anybody has joined my stream. It shows me the live chat. Hopefully that works. I don't know if it does. But they talk about the Knightscope Plus here, which is effectively remote monitoring as a service that they could add on. And so this might be, and they did at least announce one client somewhere on their investor page who was using this service and subscribed to it. I wonder if I can find that. Knightscope Plus. Yeah, there we go. And this is where the client of Knightscope would buy one of a subscription to the robot, and so they'd get it deployed at the property. But instead of that web UI that I showed you before, the Knightscope Operations Center being something that their security team or somebody at their company would be bringing up, they can pay for Knightscope to provide that service, for Knightscope to have former law enforcement and military personnel, that's their words right here, actually be the ones who are watching what the robot sees and providing a service of keeping track and making decisions on when they should escalate to the police or whatever escalation means they have. And so I thought that was really interesting, right? Like there's a lot of places where maybe we have, I felt like it might have been a bit of a barrier to entry if there are companies that don't have any security, right? Let's say a startup or a new growing company that has no security officer, and they don't want to hire a security officer, but they want security services. This effectively, I think, lets Knightscope sell just security services to them completely, using their robot that would be on site, and then they're at Knightscope headquarters or wherever they are, they'll have the actual Knightscope Plus staff who are the humans behind it making all the decisions. And that is the sort of style of humans make the decisions and robots just do all the patrolling and look at stuff and sort of have some AI to identify when things are abnormal. I think that's a model that Knightscope has really landed on, and it makes sense if you think about it, that the robots don't have to do everything, right? The robots are just a tool, and the humans are still there using the tool. So I don't see anything on the live chat again. Hopefully if you're there, if there is somebody there and you've said something, I'm sorry it's not showing up here. I'll have to take a look at it later. So what else? one thing that I also think is really interesting is that the company doesn't actually sell the robots, right? You can't go buy the robot. You can purchase a subscription to one of the robots and have it deployed at your site. But it's always it's a lease, right? Knightscope still owns the robots, which is really makes sense, right? Nobody wants to buy a robot. They just want the security services that the robot would provide. So business model wise, that makes sense. It's also has the absolutely very, very nice property from the company's perspective, which is, that recurring revenue, right? Instead of they call it machine as a service. And that means, hey, you buy it once and you have it, you buy it, get your year-long contract. And then, hey, if you want to continue having your security services, you have to continue having your robot be able to patrol, you're going to renew that contract. And that's, recurring revenue that company is going to keep booking it. And they have, they don't publish data on their retention rates, which would be really nice if they did. That's probably something they'll do after a couple of years of being a public company when they get more pressure from investors. But for now, they don't publish that, but they do at least publicize when they have some clients who have renewed for multiple years. And so if you look on here, they've put some information out on this investors page, but you can see here's one, tier 1 auto supplier renews for 5th year. And another corporate client renews for 5th year. I feel like there's at least one more where they said there's one renewing for a 2nd. I think one was for a 6th year. Hospital client renews for the 5th year, right? And so these are all different clients. I'm not seeing it here, but that's hang on real quick. I need a drink. But that was reassuring to me as an investor when I see that there are clients out there renewing for many years, right? Because one of the questions you really have is like, do they work, right? Like, is the company just painting the rosiest picture they can to us as investors right now to get some money, but they're kind of selling a vision that aren't really fulfilling. But when I see that there are clients out there who are renewing for the 5th year, especially when I don't know what tier 1 auto supplier means, but that sounds like a company that has their stuff together to at least some degree. And when they're renewing for their 5th year, that gives me some faith that the robots do actually work, right? Because if you look at it was a legitimate question I think a couple of years ago when they had maybe 1 or 2 clients who said, hey, we've renewed for our 2nd year. But nothing for this length of time, right? To stick with a product or for a service for 5 years is quite a while, right? If that was causing you issues or not working as you expect, you wouldn't have continued renewing that. And if you go back a couple of years, also when they didn't have quite this history that they could publish and that we could understand as investors, you would see some PR, which is like, hey, if you look out there, there's the robot that drove itself into a fountain and got destroyed. And this is early on in their history. Let me see if I can find that. Let's go with robot in grounds. There we go. So we can find that DC security. Yeah, so this is in 2017. And when you look at this, you're like, these things really work? Like, are they just like, sure, they had it there and it was driving around, but like the fact that it kind of just drove right into a fountain doesn't give you a whole lot of confidence that the product is providing value to anybody, right? How could it possibly if it was being that dumb? God, that picture is just, it's priceless. Oh man. Although you could put a price on these robots, these things cost a pretty penny. There is a slide in here that does talk about their economics. Let's see if I can find that. Yeah, so here we go. And so they do talk about, I think they've said it costs them roughly, here we go, it says $54,000 to actually, for the materials for the robot. At least that's the way that I'm reading this. Oh, you can't see all the numbers because I got here. Let me, oh man, I hope that wasn't blocking anything else. Move myself over here. That's probably a better place to be. So, um, so this shows you sort of the unit economics, if you will, of these machines, right? So this red here is how much it costs them to actually, the materials for the robot, and they're quoting $54,000. I actually think they are not down to that right now. I think they are. I think in the past they've quoted more like $60,000, and it's possible it might even be more. I know that they're obviously their number of robots under contract is 80, and so they haven't built a whole lot of these, right? So whatever parts they're getting, they're not buying in large quantities, and they're not they're not getting the same economics that they would get if they when they have 36,000 in their contract and they're deploying 100 of these every month, or whatever the numbers would be, right? Substantially more than they are now, and they can actually plan for these parts and buy in larger quantities. This 54,000 is roughly what they think they're going to be able to get to, as far as I understand it. But if you look at this, the unit economics are it's nice on an individual robot basis if you assume that most customers are going to renew for a couple of years, right? So after, excuse me, sorry, I need a drink. So it's interesting here. The client, as long as they renew once, meaning they buy it for the first year and then renew for at least the second year, Knightscope will be making a profit from that robot, from that customer. But after just the first year of the sale, they actually do not make a profit. They lose money. So this is negative gross margins in the first year, which is really, oh man, it's yikes. From an investor standpoint, like that makes me nervous, right? Because as this company, I the best case scenario for a startup, right, is that they continue growing and they're going to grow faster, or that they're going to grow exponentially. But the problem with that, right, if you do some of the napkin math in your head, is that if we're selling even more robots every new year, that means every new year we're actually creating larger and larger losses, sort of immediately beneath the top line, right? Because you have negative gross margins. So you sell a lot of robots, that is good growth for the company, except you're actually losing money, right? You need cash just to make those sales. You need cash for the cost of sales, because but then once you get the revenue, it will pay for itself. You're actually losing money in that first year. And so that's pretty it's gonna be interesting to see how this plays out. I think they're gonna really have to pay attention to their working capital, and I don't know. It's above my pay grade to figure, as they say, to figure out how that's actually gonna work if they do hit their stride and really grow like crazy. As I would like them, as all of us as investors in the company, as employees, want them to. But that's pretty. It'll be fun to see how that goes. But as long as the client does renew in year 2, year 3, year 4, year 5, Knightscope is making a profit from that. Now, another interesting thing to consider is actually the client doesn't have to renew all of those years. They can also, because if they don't renew, but Knightscope does make another sale to utilize that robot, obviously they don't have to pay for the robot again, right? The robot, I think they depreciate them over, this says that they can generate revenue over a 5-year period. I think they depreciate them over 3 or 4 years. See if I can find it real quick. Okay, so they are depreciating them over useful lives ranging from 3 to 5 years. So that's interesting. Some of them they're depreciating over less years than what they're actually projecting on the offering deck. Maybe there's a little bit of aspiration there, in the sense that they're hoping they can get the life of all the robots to be 5 years. We'll see. We'll see. We'll probably get more clarity as they go on as a company. And honestly, they probably need more of an operating history to really see how these things go. What else? But that's interesting, and I've run some models, and I might make a I'll probably make a future video about some of the models of how I see that cash actually playing out, and when I think they're going to need to raise more money. Which I guess that's what I really should say as the bottom line here as an investor is it's pretty clear to me that either they're going to grow, or sorry, either they're not going to grow, they're going to go bankrupt, and we're going to be out all of our money, which I certainly hope that's not the case. Or they are going to grow, which I think is seems pretty plausible. Seems pretty plausible, and but as they grow, if they grow quickly, they're going to run out of money because of their growth, right? Which is counterintuitive, but again, because they lose money in the first year for each sale that they make, for at the just from the in terms of gross margins, not that's not even considering all the SG&A that they'll have to also obviously pay for the SG&A and the R&D. They're going to have to raise more money pretty soon, especially if you look at their burn rate and also the fact that they did not totally they did not oversubscribe this offering. Let me see the I don't think I have it open, but here's the actual announces the closing of the public offering, right? So this is the current one. This is published today. I think either yesterday or today. Yeah, January 26th. That is today. And they were trying to raise up to $40 million. Trying to raise $40 million. Sorry to repeat that without my hand over my mouth. And they raised 22.3. So that's not so great because they burn money like crazy. So if we look at their how am I going to find this? No, revenue. I can't remember what they. I wish they had links somewhere in here. I'm never gonna find it. Do they actually have just income? Statement of income. I'll find it somewhere. Net income. Oh, come on. Here we go. So, yeah, as of right now, you can see their net loss for the 6 months ended June 2021. This is the most recent data we have. They have not, as a private company, partial, sort of private, public, sort of in the middle. They have not filed quarterly reports like you'd expect, like public companies do. They have lost. Right here you can see about $23 million in 6 months. Now, granted, I don't think all of that was, actual cash. Talk a change in fair value of warrant liabilities. I'm not an accountant, but I don't think that that's actually a cash expense. And I could probably find their statement of cash flows. I'm not going to go through it all here. I'll do a little more prep work for a future video and go through in detail. But the point is they burn cash like crazy. And I actually think they liquidity and capital resources. This is what I was looking for. So as of June 30th, 2021, they had $12 million on hand. And I think in here, oh, here we go. And as of December 31st, we had $10 million. And I think there is somewhere in here where they say, maybe it's in this filing. It's not in this filing. It was another recent filing. Sorry, I opened up the most recent one. It doesn't have exactly the same language. It basically said we expect to burn through $1.5 million worth of cash every month, right? And so if they had $10 million on hand as of December, right? Liquidity and capital resources. December 31st, 2021, right? So that's roughly, just a couple weeks ago. They had $10 million on hand. They just got, they just closed 22.3 million, but I think after fees, let's see, I think this is in the offering right at the top. They are losing 7% on fees. So my calculator over here. So then 22.36 million times 0.93. So they're going to get about $20.8 million actually coming to them, assuming that that's just a flat 7%. And so if they have that 20.8 plus the 10 and divided by 1, they're burning 1.5 million, which I would expect it to actually be higher, you know, if they make more sales. And as I know that they're scaling up, you can see they've got some open jobs there. That'll last them for 20 months. So year and a half. So, you know, we should roughly expect another some borrowing or an equity offering, you know, in the next year and a half, and likely even sooner. You know, because they seem like they're scaling up the company here. If you look at their careers, where's that at? You can see they've got some open positions, and some of these are new as of the past week or so. And so I would expect that cash burn rate to go up even higher. And it's hard. I know that I showed, sorry, I'm saying like $1.5 million per month, but yet that last one was a, you know, 22 million in 6 months, which is quite a bit more. But as I said, some of those are not cash expenses, I think, you know, changes in warrant liabilities. And they also historically, if you look at their expenses, they've had advertising expenses that I believe were advertising to, you know, folks like us. Sorry, I'll at least say me. I don't know about you, the viewer, but retail investors trying to entice us to you take a look at the company and invest in the company, which hopefully they are done having large expenses for that. You know, crowdfunding expenses, advertisements to get people into the crowdfunding campaign. We'll see. Oh man, this is getting a lot longer than I thought. I did have some interesting things to some other interesting things to say, but I think I'm going to end it here. It's already been a half hour. And honestly, I haven't, this is just mostly intended to be a test of my equipment, my first stream, and also to say how excited I am, how it's going to trade tomorrow. Let's talk about, you know, predictions. I'm not really going to predict anything. You know, I do think the fact that they were trying to raise 40 million and they didn't get all of that. Yeah, I'm taking that as a signal that we're probably not going to close tomorrow at or above, you know, the offering price at $10 a share. I also think, but it's going to be really interesting. I think in terms of, I don't know of another IPO that to really listing. It's not an IPO, I think, technically speaking, but I don't know of another public listing that I can compare this to where it's gone through this crowdfunding process, right? They like to highlight all over the place that they have, I want to say like 28,000, they'll say they have like 28,000 investors. Yeah, you can see here, 28,000 plus investors that hold stock in the company, right? And there's going to be some whales in there that hold large amounts of shares, but by and large, there's a lot of people who already hold shares, not like a normal IPO where, you know, it's all institutions and, you know, they have their own strategies and their own way that they do things. And especially with how this has been crowdfunded in a couple rounds over a couple of years, right? You've got a lot of people who have invested, who have had their money tied up in this for a couple of years, and when they see it at, you know, $8, if they invested in 2018 or before, I mean, some people could have invested at some of the earlier rounds. I think they raised at like $3. I believe. If I can find that. Series M. Oh, there's so many. Things are so long. No, where's the? I think this might be right near the top. Give me just a moment to see if I can find this. It has the outstanding shares. It doesn't say what they paid for them. I know that he's copy pasted this on some of the comments here in the history of fundraising, but I can't. I'm not gonna find it this quickly. Point being, probably most of the people who are holding the stock now, most of those 28,000 folks, bought in at either $8 a share or $10 a share. Now, they did we because I was one of those folks, we were buying preferred shares, and those preferred shares are not what's going to be traded, right? Those are the common shares. You had to go through a step to convert your preferred shares to the common shares, and not everybody might do that, right? I know, at least for now, I am holding mine as a preferred shares, because of the anti-dilution properties that those shares have. So, when I do eventually convert them, they will convert into more than just a one-to-one, one preferred share into one Class A share. And that conversion ratio, I think, is listed. Conversion ratio. Yeah, so I have the Series S. This is what I think most of the folks who were in the crowdfunding got, and you can see, because I think they issued some warrants. So as of June 30th, right, the conversion ratio was 1.04, right? So we effectively got an extra 4% of shares instead of just being 1-to-1. But I think they issued some warrants somewhere in between there to somebody, and now it's actually at 1.1069. So that anti-dilution is coming in handy. We're getting some extra shares, and personally, as I think they're going to have to dilute more in the future. As long as it's not a fundraising that forces that automatically converts the shares, like that anti-dilution is going to come in pretty handy for anybody who's still holding their Series S preferred stock. And apparently the Series M. I just don't know that much about it. I haven't done the research on those since I don't hold it myself. But I think there's a pretty good chance that things are going to go down when larger players get in and take a look at it, and I think come to the same conclusion that I've come to, which is that the company's going to have to dilute pretty soon. So they could, if I was an institution, I wanted to take a big position, instead of trying to pick off of 28,000 retail investors, I would wait for that. And if the company is trading down, they're probably going to get a pretty good deal on those in whatever that next equity offering is. We'll see how things play out. I think it's really interesting. It's going to be unpredictable what those 28,000 retail holders are going to do with their stock. I do think you're going to have a lot of people who just want to sell out, because they've had this sitting in the stock for a while. And I think there's a lot of people who are upset that they invested at $10 a share when it was a private company in 2020, early 2021, maybe even late 2020. I can't remember exactly when that crowdfunding round ran for, but I think you have a lot of people who bought it at $10 then and are pretty frustrated that it's now listing, or that they did this here at this newer round still at $10 a share. And they didn't see any on paper price appreciation for what they already bought in. I can understand that frustration. I mean, personally, I'm not going to hold myself to it in the future, but currently I have every intention of holding these holding my shares for a number of years, because I do think it's plausible that they capture a good chunk of that huge market that they like to spell out. They like to describe up here, right? 36,000 robots maybe in 10 years, right? That's the best guess, or that's their rosiest guess that they could give. But I mean, the market is huge, and I see this as a major asymmetric bet. Asymmetric bet in the long term, right? It's certainly not out of the possibility, or not out of the realm of possibility they go bankrupt, so I might lose all my money, or it's also not out of the realm of possibility they'll have 36,000 robots under contract in a 10-year period or so, and that would be $4 billion revenue, and right now they're a $500 million company. So if they had $4 billion in revenue, you do the math, they're going to be significantly larger than a $500 million in market cap, I assume. So I think that's the it's pretty asymmetric risk return, but we're going to find out tomorrow, you know, what the market starts to think about this. So, all right, if you've watched this far, thank you for watching. I hope you have a good day, and I hope all of this, hope you could actually hear me and see me and everything worked out this time. So thank you for your time. See ya.